Hello traders, Gary Wagner here, just about noon in Honolulu. 5 o'clock in New York, it is Wednesday, February 14th, 2018, and this is the Daily Report for Gold and Silver. Some game-changing data comes out with the CPI for January coming in at a 5-month high. It certainly affected all of the financial markets with sharply higher pricing in the precious metals. Gold basis April's futures contract closing up $23.20 at $13.5360. Silver gaining about 31 cents at $16.84, and the dollar continuing to slide to lower pricing. Today closing off about 66 points at 88.92. We saw the equities markets have a key reversal in which the Dow Jones Industrial Average traded about 120 points lower immediately following the release of the CPI data today and ended up closing up 253 points higher at 24,893. Small gains in Bitcoin, but Bitcoin is now pushed above 9,000 per Bitcoin, 93.50 and 93.40 when we look at the CME and the CBOE futures contracts. Outstanding performance today in precious metals across the board, with gold currently trading at $1355.20, which is a net gain of $24.80, almost a 2% rise on the day. But today's action was certainly a knee-jerk reaction as CPI data for January came out, suggesting that there is a definitive increase in inflation. And the best way to clearly illustrate that is to look at an extremely short-term chart. The chart that I've just put up on the screen represents a 3-minute candle. And you can see that as the day began, this of course is in Hawaiian time, but this marks the beginning of the day, 12 midnight in Hawaii, which corresponds roughly to 5 o'clock a.m. in New York. The market was trading steady and at approximately 1333. In a time span of 3 minutes, that's this single candle right here, we can see that the initial knee-jerk reaction in the marketplace resulted in gold prices plunging, trading to its low today of 1319. In fact, I've just pulled up a 1-minute candlestick chart, and you can see that the majority of the damage itself really took place in 1 minute, a very fast market indeed. What would come after that is one of the most dynamic recoveries we have witnessed this year in gold pricing, in which we saw the market trade from these lows at about $13.20 and track over $30 higher in the time span of a couple hours before it began to find some sort of short-term resistance roughly at $13.52. However, the market as of this particular time point is trading at $13.54, and that's after trading to these highs here at about $13.58. An incredible move in gold. Of course, we are long. If you recall, we issued our buy signal immediately after these lows were achieved. This was back a week ago Thursday. This would have been Friday's trading activity, and this is the actual day that we entered the market, which was on Friday at 1323. We sent out a special trade alert this morning to raise your stops to just below today's lows, which come in at approximately 1319. My recommendation, therefore, is to maintain your current long position and to maintain your new stop level at 1319. And although we did not see the same kind of deep knee-jerk reaction in U.S. equities, this being a daily average, we certainly did see a quick and decisive turnaround in that the Dow Jones Industrial Average actually was trading down by about 120 points upon the release of January CPI data. And then as cooler minds prevailed and traders began to focus on fundamentals in the market, the solid economic data recently released, as well as robust corporate earnings, equities reversed and closed up 253 points at 24,893. As we spoke about last week, I still believe we will see higher pricing in U.S. equities and gold. We have certainly seen that for the first 3 trading days of this week. However, there was one market that had a substantial drawdown immediately after the release of today's data and then closed on the lows, now moving to an extremely critical area, and that is the US dollar index, giving up roughly 0.8%, closing down approximately 72 points at 88.86. Of course, we have a key number just below there. I believe that is 88.48, in which my sense is if the market does break to those lows, we could see a free fall in the marketplace, resulting in the dollar losing roughly another 4% in terms of its value. I've just converted our daily chart into a weekly chart, and you can clearly see the 61.8% retracement. That's right here at 88.58. We have clearly seen some tentative support in that over the last month of trading, the market has been able to hold above this particular price point. But as I've said over the last couple of weeks, if we see this price taken out, especially on a closing basis, really there is no technical level of support that comes into the market until the 78% retracement, which is at 84.50. Although one day doesn't make a market, data that came out today for January CPI suggests that inflation is definitely heating up at a faster pace than earlier anticipated. That sent the markets immediately into a tailspin and then a phenomenal recovery. We saw gold spike up tremendously at one point, gaining well over $25, 2% gains in both gold and silver. Equities markets following that suit, and we saw sharply higher prices across the board in the Standard & Poor's, the Dow, and the NASDAQ. I am looking for gold pricing as well as U.S. equities to continue in their upward rally mode. This has been Gary Wagner, wishing you as always good trading. We will talk to you tomorrow for another Daily Up review. Bye-bye.